In this video, we're going to take a look at what happens to the shareholder equity accounts when we have a couple different transactions. So to begin with, here's our original stockholders' equity. Notice that we don't have any treasury stock. The first thing we do on January 4th, we purchase 10,000 shares of treasury stock at $25 per share. I want you to just think, how is that going to affect this at the end of the year? What's going to happen is treasury stock is going to have it's a contra equity, so it's going to be subtracted from the bottom of stockholders' equity at the amount of 10,000 times 25. So that's one change we can expect. Another change from that is that, notice here our common stock, we have 100,000 shares issued and outstanding. At the end of the year, we're going to still have 100 shares issued, but the outstanding amount is now going to be 90 because we bought 10,000 back. APIC is not going to change whatsoever. Retained earnings is going to change. So let's see what can affect that. On June 30th, we paid $2 per share. And remember, what are we paying those shares on? The ones that are outstanding. So we said 90,000 were going to be outstanding. So we have a dividend of $2 times 90,000 shares. And we also are given net income information. So in order to complete this, we think about that, think through it, and then we wish you had this completed. There it is. We have our they listed the authorized this time in Mal. Oftentimes they don't. They have the shares issued here, and notice the 90,000 outstanding. And so the balance is still the whole 500,000. That didn't change. APIC, like I said, wasn't going to change. Our retained earnings, we are going to take a look at that, but notice your cost of treasury stock is listed here at the bottom at $250. So how to get this retained earnings? Just to remind you, retained earnings is retained earnings beginning plus net income minus dividends gives you ending. Here's a computation of that here in the middle, and we see our net income added, dividends declared, showing that amount for the remaining amount of retained earnings. So even though, I'll tell you what, this problem has bothered students in the past, but there's only, a couple different transactions that affect, and then our big thinking part is how does it affect our ending balances over here? And so it's not as bad as it looks when you first start it. And there's your answer to our in-class problem, and you have an algorithm on your homework.